The crypto market just lost a staggering $1 trillion. Yes, you heard that right. Since the peak on October 7th, over $1 trillion in value has vanished from the digital asset space. That's a nearly 25% haircut that technically signals the start of a bear market. Bitcoin itself has plunged about 25% from its all time high of over $126,000, wiping out all of its gains for 2025 and dragging the price below key psychological levels. The fear is palpable. So, the big question on everyone's mind is this the start of another long, painful crypto winter? In this video, we're going to cut through the noise, look at the data the mainstream media is ignoring, and figure out if the bear is officially back. We'll examine the macroeconomic storm that's brewing, the on chain data that shows who's really selling and who's quietly buying, and what it all means for you. This isn't about hype or panic, it's about a straightforward look at the facts. Let's not sugarcoat it. Things look grim on the surface. The total market cap for crypto has dropped to its lowest point since early July, now hovering around $3.2 trillion. This wasn't a slow bleed, it was a cascade of panic. One of the biggest triggers was the out of the blue announcement of 100% tariffs on Chinese imports. That news alone sparked a historic market cap plunge, wiping out $500 billion in just a few hours and liquidating over 1.6 million traders. This crash has left a trail of destruction. In just the last 24 hours, liquidations have topped $617 million. These moves were supercharged by the insane levels of leverage in the system, where borrowed money creates a domino effect of forced selling. The second momentum turns south. Now, we're seeing the market set lower local lows, a classic confirmation of a downtrend. Even the institutional money that powered the market higher has hit a wall, with some of the big Bitcoin ETFs seeing record outflows. For now, the conviction that drove us to all-time highs has collapsed. Retail investors who bought in this year are now officially underwater. Sentiment has flipped from greed to extreme fear, and a lot of people are saying the party's over. The crypto market isn't an island. It's deeply connected to the global financial system, which makes it incredibly sensitive to what's happening in the broader economy. And right now, a perfect storm of macro headwinds is battering the market. First, you have the strong US dollar and rising treasury yields. In times of uncertainty, money runs from high-risk assets like crypto and rushes into safer havens. This is a classic risk-off environment, and the Federal Reserve is in the driver's seat. Many were hoping for rate cuts in late 2025, but stubborn inflation means the Fed is stuck. Any hint that interest rates will stay higher for longer sends shockwaves through risk assets. If you remember the rate hikes of 2022, you know what I'm talking about. That's what sent Bitcoin crashing from over 60,000 down to 15,000 as liquidity got yanked from the system. Second, politics and trade policy have been a huge source of volatility. The threat of 100% tariffs on Chinese goods from the Trump administration wasn't just a headline, it sparked a massive deleveraging event that the market still hasn't recovered from. And while Trump later backed down from the immediate threat, the lingering uncertainty has kept investors on edge. These macro factors create an environment where the big institutional players who now have massive influence through ETFs get cautious and start selling, putting incredible downward pressure on prices. So that's the bad news. That's the story the headlines are screaming at you, but it's not the whole story. We're about to look at the on-chain data that reveals a completely different narrative happening just beneath the surface. If you want to get ahead of the market with data-driven analysis that cuts through the fear, take 1 second to hit that subscribe button. It really helps the channel and makes sure you don't miss what's coming next. All right, let's look at what you're not seeing on the news. This is where we separate the smart money from the panic sellers. First, who is actually selling? On-chain data shows persistent selling from long-term holders, LTH, investors who've held their Bitcoin for more than 155 days over the last month. They've sold around 815,000 BTC. On the surface, that sounds terrifying, but context is everything. Many of these LTHs bought their Bitcoin at much lower prices. This isn't necessarily panic selling, it's strategic profit taking after an incredible run. This is a natural, even healthy part of a market cycle where old investors take profits and pass their coins to new buyers. The key difference is that this is a gradual distribution, not a sharp, panicked exit. Second, while they're selling, who's buying? This is where it gets interesting. While headlines are screaming about ETF outflows, there's a quiet, almost invisible accumulation happening. Large wallets and institutional style addresses are soaking up huge amounts of crypto in private, over the counter, OTC deals that never hit the public markets. On-chain data shows that the balance in accumulation wallets, addresses that only receive Bitcoin and never sell, has just hit a new record high of over 2.86 million BTC. This suggests that while some institutions are selling liquid ETFs, other patient long term players are using this dip as a discount opportunity to build major positions. This quiet buying is creating a hidden floor of support that the surface level panic is hiding. And third, what about the health of the market? Sure, prices are down, but key metrics suggest we are not in the kind of full blown capitulation we've seen in past bear markets. For example, the amount of unrealized losses held by investors is only about half of what it was during the 2022 bottom, even with Bitcoin trading below $100,000. So while there's pain, the data suggests this is more of an orderly correction than a catastrophic failure of the market structure. So, what does this all mean? Let's lay out both sides. The bear case is straightforward and you can't ignore it. Technically, we're in a bear market. A 25% drop from the top is the classic definition. Bitcoin's chart has also formed a dreaded death cross, where the short term price average crosses below the long term average, which has historically been a bearish sign. If the old rules of markets apply here, we could see another 20% drop before finding a bottom. The critical support zone for Bitcoin is between $89,000 and $94,000. If that breaks, a fall toward the $72,000 to $74,000 range is a very real possibility. But the bull case is more nuanced and frankly more compelling. Some analysts like Bitwise CIO Matt Hugin argue this isn't the start of a new bear market, but rather the finale of a quiet one that's been going on for months. He believes retail sentiment has been low for a while, and the market is actually setting up for a stronger, more gradual upswing in 2026 plus. The macro environment might be about to shift. Some analysts argue that bear markets simply don't start right when a global liquidity expansion could be on the horizon, with countries like Japan, China, and eventually even the US Federal Reserve expected to inject more liquidity into the system. The environment could become very friendly for risk assets like crypto, and unlike past cycles, the market now has the huge structural support of regulated ETFs and institutional adoption, which could act as a buffer against a multi-year crypto winter. So, to answer the big question, is a new bear market here? From a purely technical price perspective, yes. We are in a confirmed downtrend, and there could be more pain ahead. Anyone telling you otherwise is just ignoring the charts. The days of easy, straight up price action are over for now. However, when you look at the on chain data and the bigger macro picture, this does not look like the beginning of a 2018 style crypto winter. The market is fundamentally different now. The quiet accumulation by deep pocketed investors, the resilience of on chain health metrics, and a potential future shift in global liquidity all suggest this is more of a brutal but necessary reset. We are shaking out the excess leverage and watching assets move from weak hands to strong hands. Here's what I'm watching. First, can Bitcoin hold that critical $93,000 support level? A break below would open the door to deeper losses. Second, will the institutional ETF outflows finally stop and turn back into inflows? That will be the clearest sign that big money confidence is returning. And third, what is the Fed's next move? Any real signal of future rate cuts could be the catalyst that ignites the next leg up. What do you think? Are you buying this dip, holding on for dear life, or taking some chips off the table? Let me know your game plan in the comments below. I read every single one. And if you want to stay ahead of these market shifts and find out which altcoins might actually survive this downturn, make sure you're subscribed with notifications on, because that's exactly what we're breaking down in the next video. Thanks for watching.